Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting now the Asian Session Live Market Analysis and the Forecast webinar, the review part. Today we are on 13th of January, the end of the week. So the trading week gets over by today, and we find between 5 and 5:30 GMT what the players are trying to do it in the market and in which way the market has moved, whether it is in line with that of the expectations or the session-wise forecast or against, and also the levels in which they were expected to swing. Also, we will try to review and find out whether the market is in line of the expectations. So, as I explained that I take into considerations the derived forecast, which is based on a sequential statistical analysis that is referred as an algorithm. Then I will also try to do the market reading every day. And today also I'll try to do the market reading using the initial lows and the highs set around 3:30 GMT to find out in which direction they are expected to make the moves in the market. And also we will touch upon the trading strategy, how it is essential. So I will give the trade call for a demo trading platform usage, and you can use the trading strategy to limit the risk and maximize the profit. My contact details are here. Email address dr@i-knowindices.com, and the Skype chat ID if you want to talk to me or if you want to chat with me, iknowindices@hotmail.com. Then the website is i-knowindices.com. So you can contact me through any of these channels and try to get more explanation if you need pertaining to the other open pending positions or about the market. So my trading system consists of the derived forecast, the market reading, and that of the trading strategy, so that consistently we should be able to earn money from that of the market. As I have been explaining since last month, December 2016, that it is a yearly trend reversal time. That is, during the month of December and the month of January, the market is known to make the volatile moves, and that is referred as the yearly trend reversal move. Quickly they will gain the levels as if the market is unstoppable, and then suddenly reverse and make a big drop. And this sort of volatile moves are part of the game played by the other players in order to make the traders to do distress trades, so that the traders will liquidate their long positions at the lowest level for the season, and then later on think that it is not a market wherein we can take part. Then later on you find the market is expected to move in line with the expectations of the traders, but the traders, because of the emotional stress and the emotional condition, would have liquidated the positions. As a result, in the absence of the position, they can only regret that they could have held the position for a little more time in order to make money rather than cutting it in the market. But you know that if a person has to become emotional, either it has to be from within. You should get afraid so that you will be able to find enormous uncertainty, and as a result you could go in for a wrong decision. Otherwise it can be an external stimulus. So the internal stimulus is primarily when he is not able to judge whether the euro is going to go up or come down, or he assumes that euro will go up and suddenly it reverses and comes down in a quick way. Then such quick moves trigger the emotions of the traders. Then the second extraneous stimulus being the analyst and also those who use the media to talk about the market. So such analysts, they are all paid analysts, they are supposed to facilitate the players to create more and more of a decisive sentiment in the market, so that when the traders get convinced and commit the positions, then later on the players make the market to move against that of the sentiment created. As a result, the traders could lose money and the players can happily earn money from the other market. So you find both the internal as well as external function very well when a person is weak-minded. So ultimately, if he is not in a position to make a logical reason, or weak-minded and become afraid of uncertainty and also the surprises, such people will try to become the victim of such act of the players. We can't avoid it. As long as we are human, we could be under the grip of emotion at any given time. But we should try to avoid repeating the mistakes. So once you have seen that you have just done it wrongly, and later on that happened to be the right trade, so then you try to understand that it is not the question of the forecast. The forecast can go wrong or go right, but ultimately we should be able to sustain the position in the market in order to earn money. And that is why I give the forecast on Monday and review it on Friday to find and also to explain the dependability of the forecast. And as you know that till Wednesday, they gained the levels in the case of Euro and GBP after making brief downward move on start of the week. And also on Tuesday, they just made the drop during that of the early part of the European session, start gaining the levels, and then they continue to gain the level on Wednesday and Thursday, and suddenly you find that they, after making all the new highs, they dropped the market yesterday, Euro and GBP, and today they are expected to gain the level and drop and gain the level during the 3 sessions of the day. So it will be volatile. The market will make either way moves, and that is called as volatile move. And this will prevail till this weekend. From next week onwards, we will be able to come across little more light falling in the market. As a result, Euro and GBP are expected to gain the level. As well, you will come across USD and USD CHF are also expected to slowly gain the level. And you find that already the players have started making the contrarian move here. You find that Euro is showing positive net change. USDN is also showing positive net change. GBP is also showing positive net change as a contrarian move. Then you find both the Canadian dollar as well as Australian dollar are showing positive net change as a contrarian move. So from next week, they will slowly do more of a contrarian move to start with and make very decisive upward move from that of mid next week. And by weekend, we'll be able to see that US dollar is losing the shine. And I always call the US dollar as the sleeping giant. It will wake up for a certain period during that of the trend reversal time, and later on it will go to sleep. And people, once the sentiment is created that US dollar is going to be the king, and when they try to trade in line with that of such sentiment, then they are expected to be trapped by that of the players. And the players drop the market, Euro, GBP, etc., and accumulate the positions, quickly gain the market levels, and then offload their positions. So they don't have any sentiment pertaining to the US dollar or other majors. They look into them as tradable currencies. Why tradable currencies? They are also convertible currencies, and they are also the valid tender currency in the respective countries. But here you come across they are all given in the form of a ratio. Euro USD is a ratio. USDN is a ratio. It is not a physical currency. It is nothing but the ratio up to that of the 4th decimal or 5th decimal, which is being traded. So whatever the position you take in the form of a ratio has to be closed in the market. and there it differs from that of the actual current convertible conditions of the currencies. So if you understand it well, then you will be able to find that the market is really predictable. How exactly the players could make the moves in the market, even though they are known to make the volatile moves. Session-wise, we'll be able to find whether they are going to rise or drop. Accordingly, you can go in for a swing trade. Till end of this month, you can only do the swing trade as the yearly trend reversal is expected to continue. And the last week of the month of January and the first week of February, we'll come across the monthly trend reversal again. And then afterwards, the market is expected to make upward trending move, and that will be unstoppable. So it is nothing to do with it of the presidency of the US or any other country's economic conditions. The players try to make the moves in such a way, and they know very well once a strong US dollar sentiment is created, then the traders think of going for a short selling whenever there is a rise happening in the case of other majors. This is the normal tendency, and people are being tuned to follow the trend is your friend. Then everybody will try to understand trend is our friend, and if Euro and GBP gain level, immediately they will say it is a dead cat bounce back, and they use all such phrases for you to get convinced and try to go in for a wrong trade. Then later on you find that you are being trapped. And this is the normal tendency of the traders. If they gain very good profit in a trade, they will talk about it to so many friends, etc. But if they simply lose a trade or lose an account, and they don't talk to anybody about it. So this is the normal human tendency, that people don't talk much about their failures, and this becomes an advantage for that of the traders, for the players, because when the traders continue to lose and lose that account, and later on they quit trading, the new traders come in, and the new traders are not being guided to be cautious, because those who have lost the money, they don't pass on their experience to that of the new traders, that this is what happened in the market. And also the analysts, they have been seeing so many of the traders following them and losing that account, and still they insist that their trading system is the best system, instead of understanding the reality, how exactly the market is being manipulated, and they are not willing to openly talk about such facts. So this is how you find the newcomers into that of the market. They experience on their own with their money, and out of compulsion or necessity or out of greed, they go in for a real trading rather than practicing well in a demo trading account. And later on you find that it becomes a very costly affair for such traders who experimented straight away with a live trading account. So keep in mind all those information what I have passed on. It is not that I'm trying to frighten you. I'm trying to educate you so that you will be able to use your objective analysis and a common sense to understand the market. Thereby, you will be able to wisely earn money from the other market. So today also they are expected to make a quick rise and the drop and the rise during the 3 sessions of the day. Next week again we will come across the trend reversal to continue. Now coming to that of the levels in which the currencies are expected to swing. The low set for the week was 1.05. Euro came down to 1.0470 area and started gaining the level. Yesterday it gained up to 1.0684, started coming down. Then in the case of GBP, 1.2150 was the expected low, and it came down to 1.2096, started gaining the level, now trading around 1.216667, and they are expected to go up later on. In the case of yen, they made a very big downward move from that of 1777 to 113.75, breached the expected low of 115, but quickly come back. And it was an extended downward stop into 113.75 yesterday, and they did not trade there for a longer time. Slowly, the 114 level, they absorbed all the selling and come to that of 115. They are likely to gain the level as a contrarian move along with that of Euro and GBP, because they had done the downward stop, and so every dip they will try to accumulate more position and start gaining the level in the case of USDN. Then in the case of CHF again, the estimated low was 1.0050. They came down to 1.0057, and the high was 1.0225, and they came up to that of 1.0238 and trading in the middle level. In the case of Canadian dollar, 1.3050 was the estimated low, and they came down to 1.3030 and come up and went up to 1.3277 and come down again to 1.31, the middle level. In the case of Australian dollar, they came down to 72.89 on Monday and then subsequently started gaining, came up to that of 0.7519 and hovering around there. They will make some more slide and then start gaining some more levels in the case of Australian dollar. Okay, there is a question. Sharon has got a question. Good day, doctor. Is USDN continue to rise today up in the US session? Yes, USDN, they made yesterday the downward extended stop into 113.75, and it is likely to gain the level along with that of Euro and GBP today. Trend, I have seen a recording where you said a swing trade can be taken when a hedge has been hit and start to make profit. I think you said another pair in images within the same net change direction can provide a trade also. I would then the spread between the high and the low show 40 pips too. Can you explain that? Okay. Now, see, his question is, if when a position is hedged, and in the event, if another position, another currency is making a spread of more than 40 pips, can you take a position in line with that of the trend at that time? Yes, definitely. Say, for example, when he has taken a buy position in the case of Euro and came down, which is hedged, and then you find that Euro is showing negative net change. At that time, you can take a small sell in the case of GBP when the spread is more than 40 pips. And then when it comes down, you can use the hedge order to limit the risk and keep stop at entry once GBP comes down. Then book profit in GBP. And then later on, once they stop cutting the new low, you can take a buy and start gaining. Once it starts gaining the level, you can book profit on the buy side also. At that time, you can keep stop at entry in the Euro and in the hedge. And once the hedge is closed, you can keep another hedge order to limit the risk. And once Euro goes up above that of his buy level, you can book profit in the Euro also. That is also possible, provided your equity permits. Too many exposure should not confuse you. That you have to keep it in mind. Until when do you see USDN from 118? See, from that of 114 area, it could come up to that of 117. And then later on, it will go up to 119. Any other question? You can ask the questions in the question answer window. I'll be willing to answer those questions. As I explained that during that of the trending time, you will come across that USDN making the USD weakening move to start with. You know, when Euro and GBP goes up, USDN and USD-CHF will come down as a USD weakening move. And later on, Euro and USDN as well as USD will start gaining the levels as a contrarian move. And that is how they are expected to make the moves and gain the levels in all. So don't think that it is a US dollar weakening sentiment all the time. They will just drop USDN a little bit, and then if you think that it will come again to that of 113 and take a sell, you will be trapped. And you know that in the case of USDM, they are known to make the one-sided moves, continuously gain for 3-4 days for about 500-600 pips, or continuously drop 300 to 500 pips. And more so in the case of yen crosses, they can gain and drop 1,000 pips. So if you are trapped on the wrong side, then it might take a longer time for you to come out of such hedged positions. So you have to be very, very careful as well as yen and yen crosses are concerned. And you have to understand how the players manipulate it and accordingly trade. Then Brent, when a position is making profit and you put on a trailing stop, how far can we put the trailing on it? Okay, you can keep it as 15 pips trailing stop in a profit making position and keep about 25 pips away the trailing profit taking order. So you can keep the profit taking order as well as the trailing stop on the higher and the lower side of the market. So the market can hit any one. And if you find that your platform provider is frequently hitting your trailing stop, then you can keep a mental stop also. Because some platform providers, when their number of traders are less, then the platform provider dealers see that their trailing stops are filled very quickly. And in such a situation, keep mental trailing stop, and so that such market makers will not be able to reduce your profit. Hope I answered the questions. Okay. Now, these are all the levels, what I just referred it. And later on, we'll come to that of the market reading. Now, sorry. Now, I noted down the initial lows and the highs around 3:30 GMT. The case of Euro 1.0604 was the low, 1.0620 is the high. They had not breached the low or the high. Then in the case of Yen, 2140 and 2174 are the low and high. They have not breached it. And in the case of Yen, 114.56, 115.16 are the lows and the high. They just breached the high and went up to 118 and come down. So it indicates that they are likely to come down below that of 115 just to create the fear to that of the traders to liquidate the long position, and later on they are expected to continue to gain. Because you know that from the start of the week, they've been trading around 117, 116, etc. So many traders might be holding long positions at a higher level, waiting to close the positions during the weekend. So what they do is they gain some level and pretend as if USDN does not have a strength to gain further. And analysts will also say that there is a strong resistance around 115.27. And then the traders will think that it is better to book lesser loss when if USDN goes to 110, then the loss will be very big. So immediately they will close their higher level long positions. And later on the players gain more levels. So at every small gain, they hold and give that impression to that of the traders, USDN does not have a strength to go up. And you know, in the beginning of the week, everybody was aiming that USDN would go to 120. Most of the analysts were bullish in USDN at that time. And because of that, many traders have taken 118, 117, 116, the buy positions. And later on, the players dropped it. And after the drop, everybody will aim at 110. So this way, knowingly or unknowingly, the analysts misguide the traders. The analysts are the people who are supposed to guide the traders to make money, and not to simply talk something with a disclaimer and induce the traders to become the victim of emotions. In USD CHF, and 1.0099 is the low, 1.0114 is the high, they are not breached the low of the high. And Canadian dollar, 1.3134 and 1.3168 are the lows and the high, they are not breached it. Then Australian dollar, 74.77 is the low and 75.09 is the high, they are not breached it. So excepting yen, all of the currencies, they are not breached the low or the high. So they are expected to make some good moves in the case of USDN on the downside as well as the upside, and holding the other currencies, so that all the yen crosses will make very big moves to start with, and later on they will come to the other currencies. Because after forming the initial lows and the highs, if they are not breached them during the session, that means they are holding them in order to handle the crosses to start with. So they will handle the crosses for the weekend and later on come to the majors. USDN have already shown 50 pips position, positive net change, and while at gold. Based on that, I see that they will rise European and US sessions. They will make either way moves in the case of USDN. And volatility is part of the game during the trend reversal time. I'll show the trade. Then these are all the recommended trades. So you can buy near that of the low in the case of euro. They could, since the spread is less than 40 pips, they are likely to make a brief downward stop and then go up. Other time you can take a buy in the case of euro. Then in the case of GBP, they can come closer to low just to create the feel it is bearish, and then later on they will gain the levels. And in the case of yen, again they will go below that of 115 just to create the feel that it could fall, so that those who are holding higher level longs will liquidate, and later on they will gain the level slowly. Next week they will make a very quick gain in the case of USDN. So these are all the recommended trades for today. Use the hedge order to limit the risk. These are all the session-wise times for you to follow. Now we are in the Japanese session. So the mid Japanese session will get over by 6 GMT. 6 to 7:30 GMT will be the late session. They will make little more stop and moves during that time, and then they will be active in the case of majors. And then you find the gap time 7:30 to 8 before the start of the European session, and then the European session. So if you've got any doubt, you can ask me through email or my contact details. I've given it during the beginning of it. So I take this opportunity to thank FX Street for the facilities provided to present the webinar. I'll come back again on Monday and give the forecast for the next week. And meanwhile, if you've got any doubt, you can always ask me through chat or the email without expecting any string attached to that. I'm not here to do business. I'm here to mainly to help the small traders who want to earn money from that other market. So wish you all happy trading. Wish you all happy weekend. See you on Monday.